Welcome to Investors Insights. Happy New Year 2018. And our topic today is the what-ifs of 2018. Gentlemen, we got the crystal ball out. We dusted it off, made sure that it wasn't cracked. And we need to preface by saying a couple of things here. In this meeting, we went longer. We're going to try and keep all this concise. Also, there are no guarantees, but these are the what-ifs, the things that we're going to be watching in 2018 that could impact our clients' portfolios. Now, granted, from the standpoint of taxes, politics, certain other issues, we're going to be doing individual vlogs on those topics because there's so much information to cover. But we wanted to do the bullet points or things that we thought you needed to be aware of, and also emphasizing that when we do these vlogs, we do them to give you information and insight that you don't hear from the mainstream media. We're not trying to recreate the news here. What we're trying to do is let you see behind the scenes of things that we're either concerned about or very excited about that could have a huge impact, positive or negative, on your portfolios. So Bobby, we got into discussion here. You and I started going back and forth about some things. Talk about what you think one of the themes for 2018 is going to be.
Yeah, I think a big theme will be synchronized global growth. Keyword synchronized. It's been some time now that we've had synchronized global growth. We've had a couple countries leading the way. Right. Now we're starting to see most countries catch up to the others. And so the G7 countries are all growing at above average rates. Even emerging markets are starting to the earlier times of their expansion, helped by trade and then firmer commodity prices. You also have Fed normalizing rates, but you also have central banks around the world continuing to nurture their economies by keeping rates low. And so you have subdued inflation, you have low interest rates globally, and then global GDP is on track to be 3.5% to 4%. That's above average. And so synchronized global growth, three countries I want to highlight here: US, India, and Japan. Japan has grown 7 consecutive quarters. That hasn't happened in 3 decades. Plus, you have 50% year-over-year corporate earnings increases in Japan. Wow. So again, world economies are close to hitting on all cylinders, but it doesn't come without risk.
Well, yeah, and let's talk about the risk, because when you use the word synchronized, you know, I see the swimmers in the water and it's all coordinated, and I'm looking for that person that's going to come in and do a big belly flop right in the middle of that, you know, synchronized, you know, way. Case in point, Latin America. You know, Brazil's got a presidential election. Mexico has a presidential election. Venezuela could continue to be a big problem. Monarchs and dictators, we're going to continue to see a theme there. The Castro family is now retiring and losing control of Cuba. Japan's emperor is going to be stepping down. Other countries that we've already started seeing this, Saudi Arabia, you know, what about the monarch there? You know, Great Britain's another topic that we'll talk about. In fact, Ashley, you brought up about Great Britain. Talk about that a little bit and some other dynamics.
Happy to. If we get a shift in the party, it's conservative now, if it goes
to
Great
Britain.
In Great Britain, if it goes to Labour, that could be a little bit problematic for this Brexit deal in trade. So that could slow the European economy a little bit. 2 or 3 more for you. One is that China is tightening their monetary policy, and that's got huge worldwide impact.
Oh, absolutely. But China could continue to have tremendous growth along with India.
Absolutely.
You know, but talk about that. If they tighten.
That's right. If they tighten, it begins to slow everywhere. And Greg already mentioned the political situation in Latin America. Part of that is those economies are very commodity driven.
Yeah.
So if China starts to tighten monetary policy, it hits them immediately.
Yeah, that's their biggest client.
And Australia's too. They're a very big commodity client. And then the final one we'll mention is if you have an administration kind of like we do now that's got low poll numbers historically, if an administration's got low poll numbers, they have a tendency to reach out on things internationally. Right. That usually impacts trade in a normally negative way. Right. If they feel they have to swing for the fences on something.
Right.
So that could be out there.
Yeah, in terms of changing those dynamics. And another point is we have this discussion that, you know, sometimes it's the smaller countries that cause more problems than the China, the Russia that's out there. So while we focus on these bigger countries, you know, take North Korea, for example, we're all having discussions about the Olympics starting in February in South Korea. And one of the reasons we've had the firing of these missiles is due to the fact trying to scare everybody away and, you know, from coming to South Korea,
Ruin it
for the
economically.
Olympics. Yeah.
Yeah.
Just make it a financial disaster, which in turn, if something happens in February due to that from North Korea, again, it's a situation, smaller country causing a major problem. You've also got the situation over in Syria and Iraq. They're saying that they're free now, there's Islamic State. And where does that go, and how does the leadership tie into that? And talking about that, Trey, you brought up some really good points related to energy and other things.
Yeah, it's kind of outside of the political world. Things in 2018 could come to be what we're watching for that would be very important. We did a whole vlog on productivity earlier in the year, in that there was a lot of cost of people watching people work, and that's reduced how productive individuals can be. At the tail end of 2017, we've seen productivity shoot up to unexpected high levels. Are those one-off data points, or does that continue in 2018? The reason that's important is because if, as a worker, you're able to be more productive, then the company can afford to pay you more. And we get to see higher wages, and that produces growth domestically.
Sure.
You don't really need global coordination if you have strong domestic growth. Strong at home, strong abroad. That kind of situation. Also, we're watching very closely the interest rates. That could become a risk. Ashley spoke about that, I believe, a week or two ago in the vlog. That the Fed is one of the major risks right now. The Fed is expecting to raise rates 3 times in 2018. Well, if they do that, that's going to push the short end, the 2-year Treasury, above the 10-year. Well, you can't. That's what we call an inverted yield curve. And so what we've had recently is kind of a Goldilocks interest rate environment where the Fed is able to raise rates, but the borrowing costs on mortgages, on cars, on credit cards to the consumer, those haven't gone up.
Right.
If the Fed continues to raise rates and we don't have borrowing costs go up, that's where you get that risky market, and we could see that's one of the major risks. And then really one of the main things we're watching is this changing business models. In 2017, we saw a lot of changing business models. We expect that to continue in 2018. The reason that's important is because if you have changing business models thanks to technology, you have changing retail, you have changing in video and content.
Absolutely.
When you have changing business models, that people disagree on the value of that business model. If everyone agrees that something is worth X, then no one's going to sell it.
Right.
So, but when you have disagreements, if one company thinks it's worth X and someone else thinks it's worth Y, well, then they'll probably sell it Y.
Sure.
And so where you have these disagreements and these changing business models create these disagreements, you see consolidation, you see mergers, you see a whole bunch of change. And so 2018 could be a big year of change.
And that is a fantastic point, because through it all, as we've thrown out these bullet points, and we gotta mention that midterm elections are in 2018.
Yeah, that's right.
We're looking at that, and the political climate in this country and the debate that will be going on, that's going to cause the belly flops or disruptions as well. But at the end of the day, is the real theme of 2018, the changing business models, the technology going through. As I went through things, will we still see expansion on commercial drones, driverless cars, artificial intelligence, mobile streaming, medical advancement, changing business models, not just in certain industries, but across the board because of technology. While all these other things are taking place, the strength of that may continue on to continue us having strong earnings, and a strong market.
And these unexpected events. In 2017, we had North Korea firing missiles. We had a very, I'll say, unique president in terms of how he talked and interacted with individuals in Congress. And we also had huge Fed increases. And the market looked at those and laughed and just kind of went up.
Yeah.
Will that continue? Will the market continue to look at these events, these huge geopolitical events, and ignore them?
Yeah.
Will we see volatility come back in 2018?
Absolutely. So the fun part of this is, as we brainstorm and throw out these what-ifs, we will continue to track them throughout the year. You also can share in that experience with us. We're going to keep you updated on all these topics. We appreciate you staying with us for this lengthier vlog as we kick off 2018. And throughout the year on Twitter, LinkedIn, Facebook, we also will continue post on news announcements and things taking place. And we hope that you continue to have a great holiday, and as we go into 2018, that you have a lot of success and prosperity. As we always know, we can't guarantee that, but there's nothing wrong with wishing it for you. Have a great year, a great month, and a great week, and we're looking forward to doing more vlogs and keeping you informed.